Hello friends, welcome to my channel. Today we are diving into the world of forensic accounting where experts use their skills to uncover financial fraud and bring culprits to justice. India has been its fair share of high profile financial scandals in recent years, including the 1.86 lakh crore Punjab National Bank scam, the 3600 crore DHFL scam, and the 45,000 crore Satyam Computer scam. In this video, I will explore the techniques and tools used by forensic accountants to detect and prevent financial fraud and examine some of the most notable cases in India. From analyzing financial statement to identifying red flags, I will take you through the fascinating world of forensic accounting and show you how it's helping to protect businesses and investors from financial crime. If you are new to my channel or not subscribed to my channel, request you to subscribe to the channel. So let's start. Let's start with the first question. What is forensic accounting? So before we understand what tools are used in forensic accounting, let's understand what the meaning of forensic accounting. So here is the definition. Forensic accounting is the specialized practice of using accounting, auditing, and investigative skills to analyze financial information suitable for use in legal proceedings. That means if any fraud has been identified or management believes that there is a risk of fraud, they may appoint forensic auditors, right? And what they do, they use the technique of accounting, auditing, and the investigative skills to identify or collect facts which can be provided in the court or in legal proceedings, right? So it's more about fact finding. Now, coming to the scope of forensic accounting, it covers fraud investigations, dispute resolutions, regulatory compliance, and corporate governance. Let's take an example. In a fraud case, a forensic accountant may reconstruct incomplete records, trace missing funds, and provide expert testimony to in court. Okay, so it will be a deep dive, understanding about the facts, understanding to complete the transactions which are not complete in the books of accounts, and give the fact finding to the court. So, forensic accounting is more than just numbers. It's about uncovering hidden truths in financial data and protecting business from fraud. The next question is why forensic accounting matters. Fraud is costly. According to Association of Certified Fraud Examiners, organizations lose an estimated 5% of annual revenue to fraud, which globally equals over $5 trillion. Very big number, right? Rising complexity. With globalization, digital transitions, and cross-border operations, fraud has become more sophisticated. Need for trust. Investors, government, and the public rely on financial statements, so forensic accountants safeguard this trust. Without forensic accounting, scandals like Iran, Satyam, and Wirecard would have stayed hidden for much longer. So, forensic accounting is becoming a very important activity or role for all companies. Now, let's try to understand the different types of financial fraud which a company can have or a business can have. The first one is corporate fraud, manipulation of books to mislead investors. Example, Enroll created fake companies to hide debt. In India also recently there was a fraud case which belongs to IndusLand Bank where certain provisions was not disclosed or not accounted in the books of accounts. Because of that the profit was inflated. And when this news was in the market, you would have seen that the share price was drastically fallen down because of this particular fraud. Even the top management was asked to leave the company. So corporate frauds are very serious. It is the role of each CFO to ensure that the books are clean and everything is accounted properly. Second one, asset misappropriation, theft of cash or misuse of company assets. Example, employees creating ghost salaries or fake vendor invoices. These are very common in anywhere, in any company if you take. There will be certain employees, there will be certain people who will try to misuse the company asset. So when I say company asset, doesn't mean that you are misusing your laptops or something like that, but is trying to mislead the management team and trying to make extra money. There are cases where the procurement team, they onboard their known vendors, they get some amount of commission from the vendors so that they get engaged to the company. So there are different type of frauds which happens in a company, and this is categorized under asset misappropriation because you are making payment to a vendor where you don't get value from the vendor. Third one is corruption, abuse of power for personal gain, kickbacks in procurement contracts. As I explained you, there could be cases that to get a contract, you get extra money so that you treat them as L1 vendor and you give a contract to them. Very commonly seen in most of the companies. Next one is cyber enabled fraud, online banking fraud, phishing scams, cryptocurrency frauds, right? So fraud comes in many forms, from billion-dollar scandals to everyday expense manipulation. And this is not an exhaustive list. There could be different type of frauds, but broadly, these are the four criteria or categories where frauds can be classified. Now let's try to understand how a forensic auditor uses different tools and techniques for determining the facts or fraud. The first one is data analytics, examining large data sets to find unusual patterns, sudden spikes in expenses. So mostly in most of the company, the frauds are mostly done in the area where the management will have less importance. For example, like maintenance or housekeeping expenses, or there is expenses which is outsourced to different contractors. The chance of ghost employees or the chance of fraud is more in case of outsourcing the job, right? So the data analytics help the forensic auditor to understand how the expense movement is happening month to month or day to day, to find out if there is any unusual, spike in the expenses, and then they can look into it, that why in certain areas or why in certain month there is an increase in expenses, which can give you or give them more clarity about the frauds. Next one is Benford's law, statistical techniques to detect fake numbers, digit frequency analysis. So this is a specific statistical moment to see that if there is any fraud by unusual moments. Third one is digital forensics, analyzing emails, computer files, and database for hidden evidence. So if any employee, is doubted that he could be involved in frauds, then the auditor will look into the laptop and find out any type of mails or any type of files or any type of software which is used in modifying any numbers, modifying any document, or evidence of connecting with the vendors. Last one is interviews. Once you have all the facts available, the next is to get more clarity, and the interview is generally done with different type of people, not only the person or the victim. So detecting inconsistencies in employee testimonies. So you talk and try to gather information, same data you again validate with another person and find out that are there any similarities or there is some different explanation given by different person. So that is where you can get more clarity, or if there is any doubt, you have more clarity on that. Lifestyle audits, comparing employee wealth with declared income. This is the last stage which the auditor does. Once they get more data about what type of extra money or extra benefit the employee has received, after that they check that how is the lifestyle. A employee, low grade employee coming with a high costly car to the office also is one of the example to see that what is the source of income the employee is having. So it's a mix of mathematics, psychology, and detective work. Now let's look into few examples, real world case studies where big fraud was involved. The first one is Enroll. It was in USA during 2001. So this company created cell companies to hide $30 billion debt and collapsed, wiping $74 billion of investor wealth. So you can understand how badly it impacts the wealth of the shareholders. Second one, Satyam. It was in India, 2009. Chairman admitted to inflating profits by $1.47 billion. Third case, Wirecard in Germany during 2020. 1.9 billion euro is supposed bank accounts never existed. Shocked European market. Okay, that means there was no bank account, but it was showing a balance of 1.9 billion euro, quite big amount. These scandals highlight why forensic accounting is crucial. They shook economics and destroyed trust in companies. Right? This is the reason why we should have strong auditors validating processes, validating the financial statement, and then only it should be declared to the shareholders. Now let's try to understand what is the role of forensic accountants. The first one is very simple. Investigators examine records, trace transactions, detect frauds. It's more about fact finding. Second is compliance experts, ensure IFRS, GAAP, and legal standards are met. Third one is litigation support, present findings in court, act as an expert witness, as these people would have collected different facts, whether through mails, whether through documents, or through interviews. So they will present these facts in the court. Risk advisors help companies build strong anti-fraud controls. If the internal control of the company is weak, then they'll advise what process improvement is required. So they don't just catch fraudsters, they also prevent fraud from happening again. So now if you see most of the companies, they have internal control audits, especially from a third party, and they take their input in developing the process so that the risk of fraud or the risk of non-compliance is minimized. Future of forensic accounting. AI and machine learning. Algorithms that scan millions of transactions to detect fraud in real time. So nowadays, the forensic auditor need not get into different transactions and try to find out where could be a chance of fraud. So AI and machine learnings, they take all the algorithms and find out if there is any unusual transactions, and it puts those transactions in the screen, and the auditors look into those transactions and do a deep dive to find if there is any concern in those transactions. Blockchain, transparent and immutable ledgers reduce scope of manipulation. Digital currency risk like cryptocurrencies and NFTs bring new fraud challenges. Job outlook, demand for forensic accountants is expected to grow significantly in the next decade due to rising cyber and corporate frauds. Tomorrow's forensic accountant will be part of auditor, parts data scientist, and part investigator. Coming to the last slide on conclusion, forensic accounting is at the intersection of finance, investigation, and technology. It helps uncover hidden frauds and protects business and investors. Scandals prove its importance in today's business world. It is also a fast growing career path for accountants and finance professionals. So it's not just about numbers, it's about protecting trust. So today, if you see most of the big companies, they invest good amount on internal audits to ensure that there is no SOD, to ensure that the processes are really strong, and very rarely somebody can do fraud. It's not always possible that you can protect fraud, but it's always possible that you bring controls in the system or bring control in the process, so people have a fear that they may get caught if they do any fraud. Forensic accounting is a powerful tool against financial fraud. With rising corporate scandals and corporate threats or cyber threats, its importance will only grow. So that's it from my side. If you feel that I have missed out something, you can write down in the comment box. I'll explain more on that. If you have not subscribed to my channel, request you to subscribe to my channel. Thank you for watching this video. Bye bye.